Well, major averages managed to end the day higher, but well off the highs of the day after two of President Trump's advisory councils were disbanded. Joining me now to discuss, Ken Mahoney, the president of Mahoney Asset Management and author of A GPS for Your Retirement. Stocks down a little bit, but one of the pieces of bad news, we talked about the councils before. Housing starts disappointed at a run rate of about 1.15 million for the year. That's down about 5%. Building permits, importantly, were down, and that's sort of a forward-looking indicator, right? What does that tell you about the state of the economy?
Yeah, I think the economy still has some good traction, still has some good footing. But yeah, those numbers kind of worry. Right now, they're flashing yellow. I wouldn't say they're red at this point. But, you look at them, you put it on your monitor, you notice them. But I wouldn't get over concerned with one number. It could be an aberration. We'll see how the forward numbers look.
Right, and we've had such great numbers, right? Really good stuff when it comes to GDP, et cetera. I want to move you on, though, to consumer debt, because that hit a new high, $12.8 trillion. And now we were back above the levels pre-recession, right? So this is really landmark.
It is. Look, that's a big number. We don't advocate for people to go into debt, but there's also some confidence from number around it as well. Sometimes people feel pretty confident. They make a big purchase and they put it on the credit card. So we have to look at some of the noise there, too. So it's not just all bad news that consumer debt's going up. Sometimes it shows some underlying confidence as well.
Well, see, that's the way I read it, too. I look at that and I say, people are feeling good about the stock market. There's actually a Gallup poll that folks are saying, by a big majority, that now is the time to look for a job. That, to me, says that people really feel like they've turned the corner.
I think so. I think the job prospects look really good. In fact, you hear from employers, they're having trouble finding employees to match their skill level. So that's a really good position to be in as far as an employee at this point.
Now, I know you want to talk about Apple because you hold Apple.
You love Apple.
Apple's one of your big stocks. They're spending $1 billion on content.
Yes.
Tell me what you make of that.
Well, look, a couple of weeks ago, we spoke about Disney leaving Netflix, taking the content with them and starting up their own. For Apple, I think they have to do it. Think about iTunes. They charge $4.95 for one movie. That model doesn't work anymore. They know that's broken, and consumers now go to Netflix for $9.95 and have a catalog of all kinds of movies and series. So I think Apple is just finally saying, hey, you know what? We're going to join the party and see what we can do with it.
This is my question, though. This is barely a dent in their balance sheet, right?
261 billion.
Yeah, right, exactly. But is this enough to make a difference in this business? Will it give them enough money to really play?
Look, HBO is about $2 billion, Netflix about $7 billion of content for the next 12 months. But it shows a commitment. Look, again, I know $1 billion out of $260 billion doesn't seem like a lot, but $1 billion is still a pretty big. They'll probably produce about 10 series, and it's all about content now. Content killer, is the killer right now.
They're hiring really critical personnel.
You want to be an ABC producer or an NBC producer?
I'm going to go write scripts. I don't know about you.
Exactly. That's the script right there, isn't it?
Yeah, exactly. But Netflix spending $7 billion, Amazon $4.5, yes. Time Warner $2 billion. This is real money at this point, going into this emerging and new industry. Really, are there other ways to play this other than Apple?
There's a lot. Of course, if you think Netflix has a pretty good moat around them, so to speak, and have some good defenses and can protect that, then you kind of stick with Netflix as the winner. But you can't count on Apple here. It's going to be very interesting to see what they're going to do, what type of content they're going to come up with. And at some point, we have to make a decision. Do we want the Disney content? Do we want Netflix content? Do we want Apple content? We're going to buy all three? Then, wait, we just cut the cord. I thought we just cut the cord on this.
If I have to watch this on my Apple Watch. Back to the markets, though, for a second. September can be brutal, right?
In October. In November.
Do you think the fourth quarter is going to be ugly?
No, I think earnings are rolling in pretty nicely. Look, there's a lot of noise that's happening in Washington and geopolitical concerns, of course, North Korea. Earnings are holding up pretty well, and the softer dollar is really helping these multinationals. So I expect some pretty good quarterly earnings year over year are going to look pretty good, and that's going to be the fundamental story right now. Earnings are holding up pretty well, so I think we'll be okay.
From your lips to God's ear, we're all going to retire someday, and it's all because of you. Thank you for coming on. Good to see you.
Take care.